Hello and welcome to Connected. I'm Cherry Reynard. Today we're going to be looking at Dynamic Planner's Advice 2026 report. With almost 700 responses, it's designed to take the temperature of the advice industry. We'll be looking at how firms are approaching AI, leveraging data, adapting to regulatory change and planning for the year ahead. With me to discuss this today are Will Dunwell, Marketing Director at Dynamic Planner, and Dr. Louis Williams, Head of Psychology and Behavioural Insights, also at Dynamic Planner. So welcome to you both. Now, Will, as I mentioned there, this year's Advice 26 report had nearly 700 industry responses. I mean, what does that scale allow you to see that smaller studies maybe can't?
Yeah, thanks, Cherry. So for me, we've got a quite a long history of staying close to the market and trying to be ahead of regulatory change and technology shifts. And I think that only really happens through us actively listening to the market, understanding market challenges and market problems. So I think this year's report and, adding significantly to the number of respondents has really given us an even larger representative sample. So we can look at patterns and challenges, and it gives us really a strong indicator of where the industry is moving. And although last year was the first year we'd actually started the sort of survey and writing up the report from that, actually in a year a lot has changed. So yeah, it's really that sort of annual pulse that we've got against the market.
And what were the big takeaways this year?
So I think I'd probably sum it up as three main headlines really, and that is that if we look at the advisor capacity, it's changed quite dramatically in a year. We've gone up from 118 annual clients served to 134. And that's across the industry. I should probably frame that the survey itself goes out to a mix of advisors, paraplanners, and business decision makers, with the largest sample size really being around the 500-ish in the advisor space. So it's very much an advisor lens, although those other two demographics are well represented. But yeah, that's quite a meaningful increase of the end clients that they're looking after, going from 118 to 134, which for us is good because it shows that there is a capacity piece there to start closing the advice gap. The other point is around data. I think we've already for some time know how important data is to our sort of day-to-day working. But it's the foundation from which everything builds from. And we've seen a really strong increase from 47% last year saying it was operationally essential to now 58%. And that probably increase ties in with the third point, which is that the AI angle in terms of active use has changed quite dramatically from last year, where we had around 28% of people actively sort of looking at using AI, and that's jumped dramatically up to 41% this year. So I think that, and we can sort of talk through that dependency between data as we get into AI, but yeah, the main three headlines are advisor capacity that's grown, the importance of data, and then the AI increase in usage, active usage across firms has jumped up dramatically.
Yeah, I think that there were kind of two additional points that were probably more surprising for me. So one of them was the increase in the number of younger clients who are actually seeking financial advice, so that they're not waiting around to be found. They're actually looking to work with a financial advisor. I think that was one of the surprising points. And then another area is where we see advisors realize that it's important for them to kind of focus on transparency, personal item support and kind of digital offerings, but actually there's still a challenge for them to actually do this. So I think that challenge for the advisors was quite interesting, even though they know it's very important for their consumers, for their end clients, that they're still struggling to actually implement that into their offering. So I think that those two, on top of what was mentioned, were interesting for me.
Yes, absolutely. So, Will, there does seem to be a dichotomy in that capacity is increasing, and yet the report also shows that firms are becoming more selective about who they serve. In particular, minimum asset thresholds are rising. How should we interpret that?
It's yeah, it's a it is a strange balance in reality, because we've seen the minimal average investable assets go up. We've seen the interest from advisors to take on board more clients, and taking on board more clients, as Louis said, in the sort of under 40s growing. So all of these are sort of positive correlations and data points, and quite strong, in the high sort of 90s in terms of advisors. I think it was 91% of financial advisors expecting to increase that client base over the year. But at the same time, we've got this rising minimum investable assets. So it's not really tapping into what we are. Yeah, we know within targeted support, there is a massive opportunity there to start serving underrepresented groups. And we do sort of have this dichotomy really between actually growth, additional capacity, but actually we've still got quite high investable asset levels. And I think that's the real challenge. And potentially, when we see the sort of results play out, and when we see the sort of adoption of targeted support, simplified advice, maybe that will have the knock-on effect to start unlocking value at that lower amount in terms of the asset amount. And I probably should frame that when we first did the survey, that was run between sort of February and March, so it was before the FCA announced their changes on the advice guidance boundary. So yeah, I think it's one that we want to watch quite closely, because there also is the metrics and the information around the adoption of digital apps and digital engagement tools, which is growing significantly. And you'd think that is a perfect tool and opportunity to start servicing a different targeted market.
Yes. You'd imagine that there's a gap between kind of rising capacity levels and then possibly lowering thresholds at some point in the future.
Yeah, and you'd naturally sort of think it would, try and follow suit, that actually, as there's more clients being taken on, actually they are going to be clients with, at times a lower amount of investments. But I think the interesting thing around the clients that are being taken on are, when you look at the under 40s, that is a large percentage. I think 96% are taking on more under 40s than they were last year. And they're receiving more inquiries from younger clients and existing family members. So maybe what we will see over the next 12 months is, as that adoption starts flowing through, the asset value dropping in terms of their average clients. But yeah, it's a bit of an odd one at the moment when we look at it.
Okay, Louis, let's bring you in here. Does that rise in younger clients that we're talking about there suggest a kind of meaningful mindset shift in how people are engaging with financial planning?
Yeah, and as I mentioned earlier, the why there are more 40-year-olds receiving advice is interesting. From a behavioural perspective, they're the ones who are kind of demanding that service. It seems to be kind of demand led rather than supply on the supply side. And I think that is probably why it's surprising, because we would expect maybe social media, maybe AI is being used more. But as Will mentioned, kind of people are engaging in using financial apps. They're using that to access, to kind of understand more about investing. But actually, there's another layer to that. The challenge is, from the results that we found, is that advisors are not necessarily providing the service that those younger clients may need. So I think it was only 3% of firms actually said they've adapted their service for younger clients. And so I guess that kind of links back to the minimum investable asset threshold that we were talking about. So yes, there seems to be more younger clients who want this, who desire this. But if if we don't provide the service that's kind of appropriate for them, then there's also the risk that they will use AI and they will use the social media, access social media more so. And I guess that kind of flags, as was mentioned, the need for targeted support and simplified advice, or for firms to start to tailor and deliver those services. One of the interesting findings was, not only was it that younger advisors are kind of, sorry, not younger advisors, young clients are inquiring more, but younger advisors are also receiving more of those inquiries, and so they're probably more aware of the advice gap. That it personally affects them as well, the younger advisors. So they might be more open to offering this type of service. And some of our research from last year, so we ran a study last summer looking at targeted support, and we wanted to understand people's views regarding targeted support when we explain what it really means, how it could affect them. And again, it was the younger generations, the younger population, who seemed to feel it would be more valuable for them. It's more informative. They would be more likely to use the service than the older generation. And that again links to some of our findings here. The advisors think targeted support would make things easier for people. It would reduce confusion. And if we're finding that to particularly be the case for the younger group, then I think it's just opened up a great opportunity for advisors to start delivering and working more closely with those younger cohorts.
Yeah, absolutely. It's like if they can see the demand there, then it's worth it.
So that was really interesting. The statistic we had was that advisors that are in the 18 to 34-year-old bracket had a higher confidence in the uptake of targeted support than the rest of the cohort. So their sort of confidence was 66%, whereas the older advisor brackets was 50%. And it's an interesting one again to look at there, that why is it that those younger advisors are seeing that targeted support offers a really good on-ramp, and they're more positive and got more confidence about it than those sort of maybe that have been around a little bit longer. We don't have the tie-up of the data to analyse between that and then the adoption of digital messaging and in-app comms. But this year we've also seen quite a big increase in the number of advisors using that. So that's gone up from 50% to 67%. So a huge jump in the number of advisors saying that they are using in-app messaging and apps to prompt. So that sort of younger advisor versus maybe slightly the over 34. So are they just more optimistic? Are they seeing that this is an opportunity from the government and the regulator to start opening up advice? So it's again an interesting one when you start looking at the different data cuts in terms of targeted support and the opportunity that we know the government and the regulator is wanting to try and unlock. And there is differences then within the advisor numbers. So again, that's an interesting one for us to watch and engage with.
So let's talk a bit more about technology. And obviously, as you mentioned there, AI adoption has jumped significantly. Will, in your view, is this still experimentation, or are we now at the point of seeing kind of real operational impact and change?
Yeah, I think it's amazing the shift we've seen in 12 months. It's definitely moved from experimentation, but I think it's fair to say it's a little bit uneven still. So talked earlier about the active usage jump from 28% of people actively using it to 41%. But actually there's 44% outside of that are actively investigating it. So if you look at that, that's it's a huge lens across the advisor community. So the industry has definitely sat forward. They've definitely engaged. They're definitely looking at where AI can best be deployed. But I think the flip side of this is that AI adoption is actually their number one biggest tech challenge. So it's almost the biggest opportunity, but it's also the biggest challenge at the same time. So it's getting this sort of bottleneck moving from interest now, and people can see, and they're reading. Every article you see is coming about AI unlocking advice and capacity and productivity, but actually, how do you deploy that? How do you best get the the AI solutions to work in conjunction with the service that you offer? So, yeah, I think it's I think it's definitely moved into a maturity now where people are still just grasping at, right, where can it really make the biggest difference?
And is it your impression that AI is responsible for that expansion in capacity, or are there other factors feeding into it?
I think we can definitely see the capacities increase dramatically in the year, so 118 to 134. Whether that's down to AI alone, I think we'd probably say it probably can't just be that. But I think it is definitely unlocking time back for advisors. So we know from sort of time and motion studies we've done with customers who are using our AI transcription and summarization, that they're able to slash the times from the review prep, the meetings that they're actually taking, and probably alongside actually the time saving on writing up notes and gathering the right information is also that actually they're more present with their clients when they're having an annual review in person or even over a Teams call. And that's quite important when you start looking at actually the real buoyancy who would recommend the industry. Is a huge number, like 96%, I think, of advisors said they would recommend the career. So maybe actually removing some of the constraints to having a really positive and engaging prepped meeting is that actually you're not thinking about transcribing and making notes from the call. You're actually present. Louis, I don't know from your point of view whether that is something that behavioural aspect of us being able to really listen to each other rather than me capturing all these notes to follow up with. There's some correlation between that.
Yeah, exactly. And in Dynamic Planner, we are seeing AI be used to kind of transcribe video calls like this, to create summaries and reports, and to be able to edit the content in the report before it's shared. But actually, that gives the advisor the opportunity to be present in the meeting. They know that the AI is kind of being used to take notes for that, but also it allows them to review everything that's happened and to, before they share this with the client, to actually kind of have an understanding of exactly what the client was expressing. They could then think about that before they then go back and share kind of next steps with the client. So I think it helps in that sense. But I think there is still a way for AI to be used more so to increase that advisor-client relationship. It's not just AI or the human. I think it can still be used more to as a way for the advisor actually to get to better understand the client, but then also to support them better and more appropriately.
Data is obviously at the heart of this. I think most advice firms recognise how important good data is. In your view, how are they turning better data into better client outcomes rather than just efficiency?
Yeah, I think so. We found in the report that it seemed to be quite easy for a lot of the advisors to access data. And the challenge is, even though it may be easy, is it accurate? Is the data that you're being able to access, is it actually accurate? Is it valid? Is it useful? Is it helping your client achieve better outcomes? And often I feel that we don't think about the overall kind of experience of the client, the overall well-being of the client when we're thinking about their outcomes. So if we're not using that data kind of to benefit the end client, to increase their confidence, increase their resilience, then why are we accessing it? Maybe that's a question, Will, for next year, that not only are you accessing, or is it easy to access, but why are you accessing data? How are you then using using that data? It seems to be important, but why is it important? And so actually, recently, a couple of weeks ago, we launched our Financial Happiness Index, a way to capture data really about the client, around their emotions, around their confidence, around their resilience, data that can give us an understanding of how people can change over the course of the year. And that type of data, we're seeing, and we're having conversations with firms, can be useful for them to actually, in terms of the client's outcomes, in terms of consumer duty, can help them be financially happier, can help them have a higher level of well-being. And so I think it's really important that data is used for a purpose, not just measuring it or accessing it for the sake of it.
Yeah, okay. Will, anything you would add there?
Yeah, I think as Louis said, that extra dimension of trying to find the client's actual happiness is actually over and above, the traditional, regulator looking for you to really add value to a client. So traditionally that's been, what's your return been? What are you charging to offer that service? How are you offering that service? But being able to then look at the happiness of them and take the data that we're getting more readily through from clients and that interaction by advisors using more digital tools. So we talked about the increase in those using in-app messaging could actually allow you to have much more of a regular connection point. And that's what we see with Tram in terms of the sort of delivery of an app to an end customer, in that they're much more connected. And I think that sort of measure of somebody's happiness with their relationship with their advisor is almost more important than actually the returns. It's not saying actually they'd be happy if the returns drop, but it's saying actually their overall happiness, and using the data to uncover a quarter-on-quarter relationship with an advisor and client, I think is really, really powerful and over and above a traditional, are you returning a good value of return against a pension? So I think, for me, that's one thing that I think it's how can you use the data to best service clients? And I think I would call out as well the data. There's overwhelmingly people are confident about the data. We've seen an increase in the importance of it. But there is, I don't want to say an over-reliance, but 99% of people are saying they are confident or fairly confident in the data. Now, 60% are saying they're very confident. That's great. If you know what the data is, brilliant. That allows you to really have a certainty when you are applying other technology and layering that on top. And we've seen AI requires really good data. But actually, it's showing that 39% of people are fairly confident. And that's very different from saying, I know. And if you are implementing and rolling out AI with data against a cohort that's only 39% confident in the data, they're fairly confident, you could end up with some quite big challenges when it comes to sort of presenting. So I think, the data piece is really key in terms of the right foundations to layer AI on top of that, not AI first and then look at the data. And that's what we've seen coming out from the results. And that's what we've seen internally as we've been rolling out AI within the Dynamic Planner platform.
Now, one thing that was really clear from this report was that most advisors are really happy with their jobs. I mean, there was a statistic that said 96% of them would recommend their career. I can't think of another industry that would have that. But working with people remains the top motivator for advice professionals. Will, I'm wondering how that differs across those that responded.
I will pass this over to Louis in a minute. I think again, there's a real human element to advice. Those clients who are investing large sums and putting away the money, working with an advisor for their future. That's a huge step. It's probably the biggest industry where you are doing that. Opening up everything that you have as a customer to the advisor, to know everything about you, your income, your outgoings, everything, so that you can have and plan for a better future. But I think that sort of human angle is going to be interesting when we talked about how you close the advice gap, and targeted support and simplified advice is going to start needing to offer that information and the guidance to people in a much more digital way. And how can you maintain that human connection when it's over an app, whether it's via sort of a chatbot, for example, or nudges that you might get to say, take a look at this piece of content. So I think it's, and maybe this is a demographic, an age demographic thing, that actually, as younger cohorts are coming through being managed by younger advisors, that they're much more digital first, they're much more familiar, they're much more confident to share just data with them and not necessarily sit down with them face to face. And maybe there's some fears about sitting down face to face. But yeah, I think that's the thing that's really key about unlocking advice to more and more people, the 30 million people that sit within the advice gap, because we're going to need to start offering services differently. But I don't know whether, Louis would agree with that sort of fear about younger generations and how they adopt technology.
Yes. So I think from a kind of client perspective, what clients seem to value the most when they're looking for advice is the emotional value from the advisor, that reassurance they can receive, a peace of mind. And so that is something that I think that advisors actually enjoy being able to offer that type of support. They've learned to have emotional intelligence skills and be able to empathize with clients, these interpersonal skills which are core for this role. So I think that actually they enjoy that connection. They enjoy building that relationship. And we know how important that is for trust as well. So from kind of both sides. But what I also found interesting is not only a generational level, but also there was a kind of a gender effect as well in some of the results. So we found that when it came to looking at AI for advisors and how that may benefit the client, the males felt that actually it could really be more beneficial in terms of efficiency. So it could help us service more clients. It could help streamline processes. But the females, it did connect back to this relationship. They felt actually having AI and using AI, it can be beneficial because we can personalize experiences, because we can offer more quality and consistent advice. And going back to Will's point, I think there is the opportunity to combine the nudges and the digital messages through TRAM. And that's something we're actually working on with the University of Reading. We're conducting research at the moment to see how could we personalize the experience through TRAM to help clients in terms of financial happiness as well, help clients increase their happiness, increase their confidence. But also how does the advisor still have a role in that relationship? And, there's a lot of research out there comparing the AI when it comes to that relationship. And people prefer the AI to complete a task where, a mathematical task that's important for financial advice. But people prefer a human when it comes to being able to kind of measure someone else's emotional experience or emotions that they're experiencing. And that, again, is very important. So I think this combination of digital messaging, nudging to increase confidence, but then offering the support directly from the advisor, I think that's something that they enjoy delivering, but will be really important as we go further and think about next year's report as well, and the types of questions we want to ask.
Leading on from that, if this year's report really signals a kind of reinvention of the industry, what do you think Advice 27 might uncover? Will, I'll put that to you first.
Yeah, so I think first and foremost, I think we've definitely seen from this year's report that it's not just technology for technology's sake. There is a serious side to adopting AI, and that's about creating room, I think, for advice firms to decide how they use that time more effectively. So as we've heard from Louis, if they are putting that into spending more time face-to-face with their clients, that's only a good thing. They're freeing up to have proper human connections, active listening. If they're using that time to look at servicing younger clients with smaller asset allocations or investable assets, then actually they are nursing and looking after the future of the industry, really. Because actually, if we're only looking at older demographics, where's the continuation going to come when those individuals pass on or pass away? So I think for me, we've definitely seen that it's, as I said, the importance of technology can't be understated. But I think next year is going to be around, does that productivity, data and AI story, all of those elements coming together and getting data right, does that actually allow advice firms to service more people? Does it allow them to move into different target markets, start unlocking capacity, which we know, as we said earlier, the government and the regulator really want that to happen. and show whether AI actually moved from adoption to proper embedded workflows. Agentic AI is the hot topic that is in the industry at the moment. And we'd asked a couple of questions around agentic, but I think that's the real change in the next 12 months is going to be seismic, with AI at the moment doing quite important tasks, as we said earlier, saving time, driving efficiency. But actually, when agentic AI starts having AI agents that are then thinking more autonomously and following up and following activities, then I think that is going to be the real sort of game changer for unlocking even more capacity in the industry and getting the industry to look at how do we want to service the undoubted demand that exists out there. And I think the one final thing I would say within there as well is, how do firms want to tackle targeted support as that starts being introduced? Larger banks, larger firms are already adopting it. And if you're an advice firm who have a stable client base and are just managing them in the way that you've always managed before, you are going to find that those customers are contacted by their banks. I get contacted by my bank now about investment. They didn't do that a year ago. They're starting to do that now. So will that lead me to think, actually, do I really need an advisor anymore? Because my bank can provide that. And have I got greater trust in them because I've been with them since I was 8 years old? So I think that's the real change. It's the impact of AI, agentic AI, and really what happens with the industry and the firms that really look to adopt targeted support, simplified advice to their new customer base, as it might be.
Louis, anything to add before we wrap up?
I completely agree with Will there, and I think maybe a specific focus on the younger generations, and also, as Will mentioned, on the type of services that firms are going to have to start thinking about. Targeted support is something that may not be suitable for all firms. Simplified advice is another direction, and again being pushed by the regulator. But I think I'd like to see us maybe have a separate section in the report, maybe just focus on that, both from the advisor perspective, younger advisors and younger clients, because we might see a shift, and a bigger shift towards them receiving financial advice if these services are offered, or we might see something in the opposite direction. As we know with social media, we know AI and chatbots, and as we'll talk about agentic AI, we know that this may be the avenue and where they kind of turn to if those services are not offered and by more kind of traditional advice firms.
Okay, well, something to look forward to. So we will wrap up there. Thank you so much for those insights, Will and Louis. And thank you to all our viewers and listeners. And please do join us for the next episode of Connected when that arrives. So until the next time, goodbye.
Thank you.
Thanks.